Okay, and hello, welcome to another video, and today I'm going to be taking you through two charts on stock market leverage. And these charts appeared in the latest edition of the weekly macro themes, which is our institutional service. So please come on to the website and check that out if you're interested. I've talked about these two charts in the actual report in relation to US margin debt, and I'm going to be putting a blog post about that out tomorrow. And so that's going to appear on the See It Market website. So make sure that you follow that website. There's a lot of good stuff on that website. So keep an eye on that. I put blog posts on there as well. So let's get straight into it. The first chart here that we see is a picture of stock market leverage in the futures space. And this is particularly speculative futures. And so what we're seeing here is the net speculative longs or shorts across all the major US stock market index futures. So this includes the Dow, the S&P 500, NASDAQ, this mid cap and the small cap futures, and so it's all in net terms. It includes both the E-minis and the original ones. And so what we can see there also is that instead of standardizing it as I usually do, I've decided to show it as US billions. So this is notional value as well. So for example, if the contract tick size is $5, then it's $5 times the index times the number of contracts outstanding. And so that's how we get to this number here. And you can see how that evolves through time there. Typically, it seems to sort of work a lot of the time as a contrarian indicator. You tend to get very big build up in short side leverage on around the market bottom. So I guess the point here was just to highlight the level of it, because in relation to the margin debt story, a lot of people have been focusing on the level of margin debt. Well, here goes the level of index futures net speculative notional leverage in the stock market, and it's currently around $30 billion. That compares to margin debt, which was I can't remember the exact figure, but it was around 500 billion. The point is that it's very small in relation to that, and in relation to the overall market cap. I mean, S&P 500 has a market cap of around US 20 trillion at the moment. So 30 billion versus 20 trillion is not really material, but it is. There is some useful information here, more so as a gauge of how confident investors are. And I guess on that one, you probably would notice too that there's not actually the same kind of dollar value build up as there was around that point there, where just into the lead up to that really nice smooth part of the QE rally there. And so I'll move into the next one. If you have any more questions or comments about this one, make sure that you put them below. But on to the next one. I thought it was quite an interesting chart, and actually when I put it together, it really did surprise me. So what we've got here is US equity ETF assets under management, that's exchange traded funds, and it's the leverage long funds. And this is all the major, I mean, I cut ones off that were, simply too small, 10, 30, 10, 20 billion, 20 million, I cut them off. But, anything 50 million or above got included into this, and it's anything that was leveraged long, so 2 times or 3 times leveraged long, so that's whatever the return of the index is times 2 or times 3, added that all together, aggregated that, and that's what you see across time. That's the market cap or the assets under management for each of those ETFs all aggregated together. What surprised me was how, I mean, in dollar terms, it's around 15 billion, which is quite interesting. It's if you've got a real big market shakeout, that's about $15 billion of assets that are going to see at least 2 times or 3 times the impact of whatever happens to the market. So, 15 billion, again, against the overall market cap, it's not that material, but still it's going to be leaving a pretty big dent in some people's pockets if they happen to be holding that at the wrong time. But I thought this was quite interesting too, just to see how assets under management in these leveraged long ETFs just surged going in towards the bottom there. A few people here were probably a little bit too early, but these ones that jumped in here on the leveraged long ETFs would have been having quite a nice ride, with a few exceptions. And they continue to see that. I guess the other thing that surprised me is, I would have thought that it would be much larger now than back then, but I guess it just shows that perhaps that this is the people using these kind of products are potentially a little bit more on the sophisticated side of things. So they rush in when they see a market bottom, and otherwise, when they get particularly confident in the outlook, they tend to build it up again, and you can see again as we got a market bottom there. So it's so I guess in that respect, versus a contrarian indicator, as this one really is. This one's more of a smart money indicator, and so I guess it's notable then that it's starting to come down there. But it's more of a background feature, this one. So really what I wanted to do with these two charts is just provide another angle, another lens on stock market leverage. And if you look at them together they're representing about 45 billion of extra leverage in the market. That compares to, again, it's probably about a little under 10% versus US margin debt. So I'll leave it at that. And if you have any more questions about these, how I put them together, or if you've got some views on what they mean, or you've got an opinion on this, please do go ahead and share that in the comments below. And make sure you subscribe to the channel, and of course keep an eye out for that margin debt blog post that's going to show up on See It Market probably tomorrow.